Okay, so we'll make a start. Welcome everybody to episode 2 of our Express webinar series. Today we're talking top tips for making an offer on a pharmacy. Now, before we get started, I would like to pay our respects to the Bunurong peoples of the Kulin Nation as the traditional owners of the lands on which we conduct the webinar today. By way of introduction, I'm Andrew Whelan. I'm the GM of AP Group, and we're also joined by our Big State Sales Manager, Will Brown. Now, the webinar today is an interactive session, so if you've got questions along the way, please do submit them via the Q&A function. You'll find that on the Zoom menu at either the top or the bottom of your screen. And what we'll do is we'll hold those questions until the end, and we'll answer as many as we can at the conclusion of the content. Okay, so we'll make a start. We're going to take you through 5 things today. The first of those is around knowing your budget, so you can submit an offer with confidence. The second is strategies for putting your best foot forward when you do make an offer. Thirdly, we'll talk a little bit about offer clauses, some of the common clauses and things to consider including in your offer. Number 4, the importance of having the right team of specialist advisors to support you on not just the offer journey, but the whole journey of purchasing a pharmacy through to settlement. And then finally, we'll talk about the importance of having your operating entity set up ahead of making your offer. So taking a look at Know Your Budget, this is a topic that we covered in a little bit more detail in episode 1. So today we're just going to do the top line. And for anyone who is interested in a little bit more detail, we'll send out the recording for episode 1 so you can dive into that and get that detail if you like. But the key thing we want to leave you with for Know Your Budget today is that primarily banks will assess your application on 3 key criteria. So the first of those is capital. And put simply, this is really the asset that provides security for the loan, which in this instance is the pharmacy that you're seeking to buy. And then the second component is the cash or equity that the applicant needs to bring to the transaction to be able to complete. So talking in generalities here, banks will typically lend between 75 and 80% of the value of the pharmacy, which obviously leaves 20 to 25% for the purchaser to find themselves. The second key piece here is capacity. So very simply, this is just, can you demonstrate an ability to meet the repayments for the loan that you're seeking to take out? And finally, the character of the borrower. So this is a really important one. Key things here is, do you have the requisite experience to be able to demonstrate to the bank that you're a safe pair of hands to run the business that you're looking to buy? And beyond that, do you have a history of sound financial conduct? So if you've had liabilities in the past, so a home loan or a car loan, credit card, for example, have you demonstrated a consistent ability to meet those repayments and manage that facility? And then second to that, have you managed to maintain a clear credit rating? So things like staying on top of electricity bills and phone bills may not seem so important, but when it comes to seeking a loan from a lender, they want to see that you've got all of your financial affairs in order, and essentially you're the right person for them to back and lend money to buy a pharmacy. So once you know your budget, the next step is to submit an offer. And we're lucky to have Will Brown with us today. So in his role as state sales manager, Will would see literally hundreds of offers on pharmacies each year. So he's pretty well placed to advise on which offers are most likely to succeed. So over to you, Will.
Thanks, Andy. So if you've been looking at a listing and you've decided it's the right one for you and you're keen to proceed with an offer and try and buy the business, then it's really important to put your best foot forward and come in with a strong offer early. Our data shows that in the vast majority of cases, the first party to submit a good offer or an offer that's close to an acceptable range or in the acceptable range, then those parties, in the vast majority of cases, end up actually buying the business and being successful. So a strong early offer will either be agreed to by the vendor, in which case you'll buy the business, or it might elicit a counter offer from the vendor and you can start negotiations. Or in some cases, if it's a hot listing scenario where there's lots of offers coming in, a good strong offer might get you a last right to offer again at the conclusion of the offer process when some of the other parties might not get that right. Conversely, lowball offers are unlikely to elicit a counter offer. They'll probably just put you at the back of the queue amongst the other interested parties. And in worst cases, it might even erode your credibility as a genuine buyer. So it's really important to put your best foot forward and start off strongly in the offer process. Okay, the next thing we want to highlight is around knowing your offer clauses. So the price is obviously a really important factor that the vendor is gonna consider, but an offer is not just about price. There's also a lot of other conditions in there that the vendor is going to consider. So it's all about balance. You want to make sure that you're protecting yourself and that you're comfortable with the offer that you're putting forward, and it has all the necessary clauses in there to make you comfortable with proceeding. But equally, you don't want to overcomplicate your offer with multiple or various or unnecessary clauses that you don't necessarily need in there. In which case, it might make it unattractive to the vendor, and it'll give yourself or it'll give you not much chance of the offer actually being accepted. So yeah, it's really about finding that balance between making sure you're comfortable and making it attractive to the vendor. So one of the most common clauses you'll see in an offer for a pharmacy is due diligence. Now, this is essentially a 1 to 3 week period where you can request and assess information to verify what was advertised in the listing. So it's really just making sure that everything's above board and that you know what you're buying, and that what was advertised and shown to you by the broker or in the listing is correct and is sustainable. So we always recommend that you do engage an industry expert accountant to assist you with your DD investigation. They're just going to be able to help you get into the detail and make sure that everything is as it should be. It's important to note that DD is not a change of mind opportunity. It's a verification process, as I said, to confirm what was advertised, but it's not a chance for you to have a rethink and maybe say, oh, actually, no, maybe this isn't the pharmacy for me. It's only really if there's something materially wrong or if something has materially changed from what was advertised and from what was shown to you. Finance, pretty self-explanatory cause, but you should already have, as Andy said, you should already have confidence in your ability to get finance at the offer level, because you will have done a capacity assessment with your finance broker. So the finance clause is really just an extra safety net there in case something comes up and you're not able to get finance, but you should really have a good idea that you'll be able to secure a loan and complete the deal. The next common clauses you'll see are lease assignment and authority approval. So the lease assignment or lease transfer is your right to occupy, and it's a necessary step towards settlement, and so are the regulatory approvals. So that's like your state-based authority like the VPA or New South Wales Pharmacy Council, and then the Department of Health. So they're all necessary steps. Now these are actually the last two, the lease assignment and authority approvals, are standard clauses that are built into the AP Group offer template, which can be accessed in every listing profile on our website. So some of you will have seen the red make an offer button while browsing our listings. But yeah, that's basically a stepped process where you can click the button, make an offer, you sign it at the end, and then it comes through to us. And you put in your DD and finance clauses and some other special conditions if you need them, but the lease assignment and authority approvals are built into that offer template. So just to recap what I said earlier in this slide is fewer clauses or more favorable clauses will help make your offer look more compelling in the eyes of the vendor compared to another offer at the same price. So it is important to consider all aspects of your offer, not just the price. And yeah, as I said, you want to make sure you're comfortable and protected with the necessary clauses that you need, but equally you're not overcomplicating your offer and making it unattractive.
Fantastic. Thanks for that, Will. Some great recommendations in there. Now, guys, we have had quite a few questions come through the Q&A function. Please do keep them coming. We'll get to as many as we can at the conclusion of the webinar. So thanks, Will, for your advice there on clauses. Can you tell us a little bit about why a specialist team of advisors is important in the offer process?
Sure. So pharmacy settlement process is long and fairly complex. It generally takes around 5 to 6 months to complete. So it's a bit more involved in, say, a residential real estate settlement process. There are a few more stages. It's a bit more complex. And as we all know, pharmacy is a unique industry. There are unique challenges involved in the process, and there are regulatory frameworks that that the parties will need to navigate in order to get to settlement. So because for those reasons, it's really critical that your advisors are actual pharmacy experts who have the necessary experience and knowledge to make the process smooth and actually get to completion. So you might have a general advisor that you've used in outside of pharmacy that you really like, and they might be really competent. But if they're not pharmacy experts and they don't have the experience and knowledge, then they're not going to be across all of the details that you need to be across in order to make it a smooth and successful transaction. Like, as I said, the regulatory processes. There are certain clauses in pharmacy contract of sale that are really specific to the industry, pharmacy stock take procedures, etc. The list goes on. So it's really important that they have experience and knowledge in the pharmacy space and they know what they're doing. By the same token, I'm an expert in selling pharmacies, but I'm not an expert in residential real estate. So it wouldn't be sensible to engage me to sell your house, but it would be sensible to engage me to sell your pharmacy. So it's just about getting the right person to do the job. And it's also important to keep in mind that if the settlement process does get drawn out, then that generally comes at a cost to the parties. So expert advice will end up saving you time and money in the long run. So that's a really important piece. All right, the next thing we want to highlight today is setting up your operating entity. So the pharmacy can be owned in your name as a sole trader, or it can be owned via a trust or company entity. So the majority of pharmacies that we see these days are under a company structure, with the pharmacists then as the directors under that company. So we won't go into much detail around the differences between these different options today, but it is just important to note that this is something that you should discuss with your accountant and prepare before you start making an offer, because your ownership structure will need to be established, and it's something that will be required during the settlement process. So there are a couple of key stages in the settlement process, like finance, lease assignment, and authority approvals that can't be commenced until your ownership structure is established. So having that ready before you start making offers just means that you can hit the ground running in the settlement process and start some of those key tasks really quickly, and that's just going to end up leading to a smoother settlement and hopefully a quicker settlement as well, and a bit more stress-free settlement too. All right, so just to cover off, or just to recap what we've covered off today. So the first key point was book a capacity assessment so that you can offer with confidence and know where you sit. Prepare your offer strategy and necessary clauses. So give yourself the best chance of actually buying the pharmacy and buying the pharmacy that you like, I should say, and being successful. Start building a team of specialist advisors. So that's just going to help you make settlement as smooth and stress-free as possible, and will help you get to settlement on time as well. And setting up your operating entity, which is the last slide I just covered. So that's just going to help you commence key settlement tasks quickly and really hit the ground running in the settlement process.
Fantastic. Thanks for that, Will. So we do have a few minutes left, so we'll dive into some questions. We've had a few good ones come through. So one question is, can I get a pre-approval when looking to buy a pharmacy? So I'll answer that one. So pre-approval's very common in the residential space. So we'll often see a pre-approval in place to buy a residential property. It does work a little bit differently in pharmacy, and the reason being is that each pharmacy is different and has a different return. So two pharmacies that both sell for $2 million. One of those pharmacies, for example, might have earnings of $300,000 and the other might have earnings of $400,000. And it's just how the market has assessed them. They both cost $2 million to purchase. So putting your bank hat on, you can see that your ability to repay the loan there is going to be quite different based on whether the pharmacy is returning $300,000 to you or $400,000. There's a big difference there. So that's why a bank really does need to see the specific pharmacy that you're applying for a loan to purchase before they can approve the deal. So the key thing here is get the capacity assessment done up front. That gives you your best possible guide for what your budget range is. And then following some of the other steps that Will had just gone through, like having your operating entity set up and your specialist team of advisors, means that when you do have a when you have placed an offer and that offer's successful, you can hit the ground running and formally apply for approval for that specific pharmacy. Okay, so we've got time for a couple more. It's a good question that's come through here. What are the risks of a delayed settlement? Does it matter if a settlement pushes out beyond that 5 to 6 month time frame that you'd mentioned, Will?
Yeah, that is a good question. Yeah, it generally creates a more stressful settlement process if things blow out. So it just can put a little bit of extra on the extra pressure on the parties. But I'd say two of the key reasons why you want to avoid settlement delay relates to business performance and workforce. So if the settlement date does blow out significantly, then you increase the risk of business degradation. So even if they're doing their absolute best to run the business and maintain it as best as possible, most owners won't be driving the business in the same way by that stage of the transaction. So the business may not be performing quite as strongly as it was when you first had your offer accepted. And that just compounds the longer and longer the settlement gets blown out by. So that's one consideration. And the other key reason I would say relates to workforce. So from a staff retention and wellbeing perspective, even if you have provided assurances that their jobs are going to be retained once settlement occurs and you actually step into the business, in any case, that changeover period is quite a uncertain time for staff. So if settlement keeps getting pushed back, then it does increase the risk that staff might become a bit unsettled or a bit frustrated and perhaps start looking for another job or even get poached by another pharmacy. So it's just when settlement does get pushed back by weeks and months, it just does open the door for little things to come in, whether it's the business not running quite as well or staff getting a bit unsettled. So that's why it's in everyone's best interest to make sure you tick off the key settlement tasks quickly and you actually reach settlement on time, just to reduce the risk of anything untoward sort of happening.
Fantastic. Thank you, Will. Got a couple more coming here that we'll get through quite quickly. So I've got a question here. Who performs the capacity assessment? Is it the bank or a finance broker? So to answer that, our recommendation is always to go through a finance broker. Key reasons for that are you then get access to a full suite of lenders. So not every pharmacy will suit every lender. Each lender has different policies around what they will lend for a specific pharmacy. So if you go through a pharmacy specialist broker, they'll be able to give you a budget range, but also be your pathway to communicate with as many banks as possible to make sure you get the best possible deal. Another question here that we'll address very quickly, the approximate cost on top of the purchase price to get the purchase settled. I'll pick this one up as well. So we always advise to allow $30,000 as a general rule to cover your key costs of legal, finance, and accounting. That can vary greatly depending on who you select to advise you, but that does give you a range to work with. And with that, we are out of time, guys. So thank you so much for your attendance today. It's great to have everybody along. Everybody will receive a recording of the webinar and a survey via email later today. Love it if you could take a couple of minutes to fill out that survey. Helps us keep the webinars as useful as possible for you. You can also find more information and resources on our website at www.apgroup.com.au, and also the recordings of our webinars are on our YouTube channel. There's a number of questions we haven't got to, so we've got your email address, so we will come back to you to see if we can get a specific answer for you on those questions that have gone unanswered. And then lastly, we'll be back again same time next week for the third episode in our Express webinar series. Next week, we're going to be talking top tips to increase your borrowing capacity. So we'll wrap there, guys. Thanks for your attendance. Have a great day.